Welcome to another video from StageAnalysis.net. Today's video is the weekend update of the major US stock market indexes and indicators, where I'll go through the major US stock market indexes plus the key market breadth indicators, including the Bullish percent index, the new high, new lows indicators, the advanced decline line indicators, the percentage of stocks above their key moving averages, and some custom indicators exclusive to StageAnalysis.net, including the sector breadth chart with relative performance rankings of the major sectors. And finally, the point and figure breakouts minus breakdowns charts. The purpose of the weekly market breadth update is to help determine where stocks will go next based on the combined signals of all the market breadth indicators, which is referred to in the stage analysis method as the weight of evidence. To see more of the market breadth charts and our daily breakout stocks watch list, go to stageanalysis.net. And to get all of the latest videos, subscribe to the YouTube channel, and please hit the like button below on the video on the YouTube page and leave any comments as well. Okay. Quick disclaimer, all stock charts and ideas presented are for educational purposes only, so please do your own research before making any trades. So let's start tonight with the major indexes. So we've got the start on the left here with the S&P 500. Well, see, this week we had a strong pullback at the end of the week with a 2% drop in the S&P 500 back to its 10-week moving average. Most of the major indexes had falls this week, which were evident in last week's market breadth, with a lot of the individual sectors breaking down before the actual indexes were breaking down. So it does show the value of the breadth information that you can get from the individual sectors and stocks before, because the indexes are obviously averages of this information. So next we've got the Dow Industrials here. As you can see, it's been underperforming the S&P 500 since obviously early in the year, around March, April time. It's continued to. It's now below its 10-week moving average, but it's still above this rising 30-week moving average. The Nasdaq continues to outperform. This is the Nasdaq 100. Continues to outperform the S&P 500. As you can see, it's been outperforming since early in 2019. Even during the pullbacks, it's continued to outperform now, and it's not yet at its 10-week moving average. It's still above both strongly rising and the 30-week moving average strongly rising. Then we've got the small cap index, which has pulled back into its stage 1 range. It's actually fell below the breakout level this week, and it's getting back close to its 30-week moving average back here. It's been underperforming since October 2018 and continues to do so. So this one moves back into stage 1. Next, we've got the Treasuries chart. Highlighted this a couple of times with the breakouts in the last few weeks. So it made a stage 2 continuation breakout attempt this week with a breakout to new highs with some increased volume. The relative performance has started to pick up again since the start of the year. Although it was underperforming since October, but it's now moving back towards in line with the markets, still a little bit below. But clearly, Treasuries are breaking out. You can look at multiple Treasury charts from the 1 to 3 years, 7 to 10, the 20 year, the 30 year. They're all doing the same thing, and multiple individual bond charts as well doing the same thing. So clearly there's a bit of a risk off trade going on in the market. Gold next here, we finally made the stage 2 continuation breakout. Volume was okay. Started to outperform the S&P 500 here. So stage 2A breakout was back here in June time, and we've now had our first pullback. So we're moving into the third wave here, and so it's hopefully we should get a continuation move that continues up towards the 2000 level. Next we've got WTIC, which is like crude oil. Again, third week in a row, very strong down moves. It's moving back towards the bottom of its stage 1 range here. So it's been underperforming for more than a year. So it continues to underperform, and potential for a stage 4 breakdown there. Copper, it's been destroyed the last 2 weeks, which looks like it's probably due to the virus in China. But obviously it doesn't matter what causes it. Price action is what matters, and we're back below the 30-week moving average here, which has turned down, and we're near the bottom of the range, so we could be moving for a stage 4 breakdown attempt. So one to watch. Okay, now moving on to the breadth charts. We started off, I've set these up this week so you can see the bullish percent index and the moving average breadth in the same charts. So on the left here we've got the NYSE bullish percent index, and on the right we've got the Nasdaq composite bullish percent index with the 200-day, 150-day and 50-day moving averages below. So as you can see, same as the markets, we've had strong pullbacks here. We didn't make it above the 70% level in the NYSE bullish percent, and it's now back to 62% of stocks that are on a point and figure buy signals. Nasdaq composite, similar range, we're at 61% are on a point and figure buy signals, so both still in bullish zones but in a pullback here. And the 200-day percentage of stocks above their 200-day moving average, so this pulled back the other week from above the 70% level. If you use the point and figure charts of these, the alerts are done via multiple points, and the 70 a pullback below the 70% level here would signal a bear alert signal. We've got 150-day, which is my favourite of them for market timing, which has pulled back to 58% level here. So it's moved back below 60%, and so it's moving into the neutral plus zone again. So we're again bear alert. We're on the short-term 50-day moving average has broken multiple levels, multiple swing lows here. So this is on a bear confirm signal, and it's back. It's at 43% now. So we're on a bear confirm there. Nasdaq, similar readings, similar things. They neither made it above the 70% level in the 200-day or the 150-day. And the 50-day short term has moved below multiple swing lows again, and below 50%. It's at 45% currently. So again, that's bear confirmed on the short term, and bear alerts potentially on the medium and long term. Let's next look at the advanced decline line. So on the left here, we've got the cumulative advanced decline line for the NYSE. So as you can see, it's been strongly rising since early 2019. The pullback hasn't yet got below this 50-day moving average. So this is just in a pullback phase currently. This is the 10 and 30 week EMAs, which I use for signals. And so you can see the last signal was back in June when it had a buy signal back in June here. We haven't yet had a crossover on the 10 and 30-day EMAs here for it. So this one's still on a buy signal, although in a pullback. And on the right here, we've got the 10-day moving average momentum index, which has pulled below its recent range. It's near the bottom of its the strongest it's been since the 2018 breakdown now. So as you can see, this kind of 400 level here, we tend to find a bottom around this area on normal pullbacks. So depending on how strong this pullback is currently, we will see. But the longer term 200-day momentum index, as you can see, we made a lower high here, so we've got a bit of a divergence going on here, and we obviously got the swing low from December, and we're approaching that swing low level. So a break below this level here would be more ominous and would signal a stronger pullback in progress. And next we've got the NYSE McClellan oscillator, which again is near the bottom of its normal range. So you would be expecting on a normal pullback would be reaching where we'd normally find a swing low. And summation index it's in a pullback, but remains above a lot of the recent range. So let's move it on. Next, we've got the NYSE 52-week highs and 52-week lows. The grey is the 52-week highs, and the red is the 52-week lows. And on the right here, we've got the Nasdaq 52-week highs and 52-week lows. So the grey is the 52-week highs again, and the red is the 52-week lows. So again, we've stopped the 52-week low. Highs has dropped significantly in the last week or so, but the 52-week lows has picked up, but it hasn't yet got above the key 100 level very much. It has in the NYSE a little bit. It got to 114 Friday, but Nasdaq hasn't yet made it there. As the combined chart at the bottom right here shows we haven't yet got into negative territory overall, and the cumulative line has been rising strongly throughout 2019, is a long way extended from its 50 day moving average. So it's the new high, new lows. Next, we've got one of my custom charts that I do on stageanalysis.net. This is the cumulative point and figure breakouts minus breakdowns in the US market. So this basically, I do a scan each day for the amount of double top breakouts and the amount of double bottom breakdowns, and I add them up quite simply and chart them. And this the red line is the 20-day moving average, and the green line is the 50-day moving average. So for signals on this, I tend to use the moves below the 20-day moving average as a signal. So and I use it as like a risk on, risk off indicator. So we're now into a risk off phase at the moment. So, but as you can see, we are obviously moving averages are rising, and we're above obviously recent ranges. So it's not looking too hairy at the moment. Next is another custom chart that I do on stageanalysis.net. So each week I tot up the percentage of stocks above their 150-day moving averages in each sector, and I do the same for the percentage of stocks below the 150-day moving averages in each sector and create the average. So at the moment, everything had a very strong negative week. Obviously, particularly financials, which is the largest sector by a long way. Multiple sectors did as well though, so technology and energy, which has been the weakest sector throughout the entire year, which has now only got 23% of stocks above the 150-day moving average, so it's moving down into the oversold levels almost. But it's been weak for the entire sector, and shows that you should always stick with the strongest sectors. So currently, utilities is the strongest sector, remains at 76% of stocks are above the 150-day moving average still. Technology and healthcare both are above 60%, and the other sectors have moved into the neutral ranges in the 40 to 50 ranges here. So let's go on to the visual chart of this. So as you can see, strong moves down, energy huge move, financials big move down below the 70% level here. So everything's breaking multiple levels of support there, except for healthcare and utilities. That's next. This is a visual representation of the same chart. So the scale goes from 0 to 100 on the left here, and on the right just got some visual aids. So anything above 60% is considered bullish, anything below 40% is considered bearish, and neutral ranges in the middle. So as you can see, we've moved into the neutral ranges here, with the majority in the neutral plus range at the moment. So if we're in a normal pullback, you would expect most sectors to base around the neutral area, and then we'd start moving back into the bullish ranges again. But obviously if things get a little bit more scary in the market, then we'll start breaking down with more sectors breaking into the bearish mode. And if that happens, we then wait for sectors to get into the oversold zone and then sit down there for a while, and then the signals are when the sectors start to move back above the key 30% level again, back out of this oversold level. But we do everything in a weight of evidence approach, so we look for everything to move as one. So once you get the bulk of sectors down into the oversold level down here, and then we start to get some movement back out, that's normally a signal to get bullish again. But like I said, in a normal pullback, you wouldn't expect them to get down into the bearish ranges, only the weakest sectors like energy currently. So you would expect them to base around the 50% level and then move back into the bullish ranges again. Okay, I think that's the end for tonight. So thank you for watching. Please subscribe to the channel, hit the like button if you like the videos. I do this every week on stageanalysis.net, and yeah, I'll see you on the next one.